Good morning and welcome to the B.F. Anderson Technical Report for March 21st. I just wanted to show a quick analysis here of what stocks have done historically after midterm elections. It's really interesting that during the since the 1940s, we've seen the market rally between the midterm elections and the following year. The average gain, if you notice at the bottom, the average is 14.5%. Exceptional years were 1954 with Dwight Eisenhower. The market went up 33% over the next 12 months. John Kennedy, 25%. Ronald Reagan, 20%. George Bush, 25%. Bill Clinton, 27%. So basically, I think the logic here is, or the common sense thing would be, the Federal Reserve wants to stay accommodative going into the presidential election because he wants to see his guy win. So hopefully that's what we're going to have, and we'll see a nice rally between here and the next 12 months. So we get right into the indexes. This is the NASDAQ. Now remember, the first thing we're going to look at is volume, trend, and then price. So you can see here with the volume, 4 days ago we had a really which was last Friday, we had a really nice pop in volume, way above average, and we kind of got a little bit of a gap up here in the NASDAQ, and you can see that the trend is up, the moving averages are clearly up, trend is up. Now on the 35-week moving average, this is our weekly index. Again, last week we had good volume. So far this week, we're having basically positive volume. The 35-week moving average has not turned up, but we are above the moving average now for 5 weeks, going on the 5th week, which the longer we stay above it, the better. Advanced decline line, looking fine. We did have a couple of days of net decliners. However, we had several days of net advancers, and we can see that the advanced decline line continues to stay in an uptrend. High-low index, we're not getting a bunch of new lows. However, we're not getting a bunch of new highs either, but we did get somewhat parabolic up here, and this looks like it's normalizing. You can see here yesterday we only had 27 new lows. Last week was a difficult week. We saw new lows get above 40, but we've settled back down again. Looks good. This looks really good, which is the long-term indicator. This is the 10-month versus the 20-month. Nice uptrend. We got into some difficulty last year, which caused this pullback here. However, we're back above the upper moving average. Upper moving average has turned up. Now, hopefully, this line will start to widen, and we'll get more like this. Hopefully so. Put-call ratio, we're somewhat neutral on sentiment, which is good. We don't want to get too hot, and we don't want to get too hot or too cold. We're just right. Now, I wanted to mention, again, we have talked about this before. We have had a rare 10-day breadth thrust, and we've reclaimed the 200-day moving average. So if you go back in history and find out that breadth thrusts are where you get 10 days of trading volume, where the advancers beat the decliners 2-to-1 over a 10-day period. Now, this is rare. It doesn't happen often. Now, we got a breadth thrust at the beginning of this year in January. Now, what I did is I went back to 1991 to look at a breadth thrust that we had in 91. Now, you can see it right here. Now, the question now is, what happened over the next 10 years? Well, probably the best bull market I've ever experienced in my career. So this is where this is the beginning of 91 when we got the breadth thrust, and you can see that the trend just really improved and had a nice move. In fact, the S&P 500 moved up 334% in this time period. So the two things are the breadth thrust and retaking of the 200-day. Very positive. Again, I wanted to show our breadth thrust. This is where we're at. The beginning of this year, you can see the breadth thrust. You can see, we pulled back last week, but then we've retaken the 200-day. Here's your 200-day. We've retaken it, and we've broken out above this resistance level here. So, looks good. Now, another thing I want to point out is the semiconductor index has been very strong this year. You can see the dramatic up move in the semiconductor index. It has broken out. This is very positive. When the semiconductors are positive, it means that technology is positive and things look good. This is very positive. Now, on the value line geometric index, I really want to point out that this could be a history-making situation. This could be a window of opportunity that we have not seen for 20 years. In other words, we rallied up until 2000, went into a deep recession, bad economy. We then rallied and recovered, but then got into the mortgage crisis, terrible situation, probably the worst drop in the economy since 1929. I mean, interest rates went to basically 1%. Then we started a recovery, stalled out. Now we've broken out above the box for the first time in 20 years. So you really do have to ask the question, does this mean something? I think it does. I think it's very important. Now, one last thing I want to mention here on indicators, the U.S. 10-year Treasury bond or Treasury note, the yield, yesterday the Federal Reserve came out and said they're not going to raise interest rates. And they say they're not going to raise interest rates for the rest of the year. Well, you can see what's happening with interest rates. Interest rates have basically plummeted here to a new low that we haven't seen in a while. So interest rates are dropping dramatically. Now, that's a two-edged sword where is the economy slowing? Is the market discounting an economic slowdown? Or is it just no inflation? Well, the Federal Reserve Chairman Jay Powell said there's just no inflation. So, no inflation, high employment, good economy, kind of a sweet situation. Now, let's get into the top five. Now, remember, again, we're going to look at volume first, trend second, and price third. You can see here, this is Chipotle Mexican Grill. The stock broke out, gapped up on earnings, has continued to hold this 10-day moving average, is in a very strong uptrend, and just broke out here 2 days ago, made an all-time new high. This is a really good-looking chart. Now, this is a company called Keysight Technologies. They're involved in the testing equipment used in 5G technology, which we believe is going to be one of the biggest technologies going forward out there. You can see here, you got your breakout here. Strong uptrend, has stayed above the 10-day moving average almost all year. Pulled back a little bit in here. However, strong uptrend. Keysight Technologies. This is an interesting situation. I really wonder if the weakness in the dollar, with interest rates dropping, the dollar weakens. And this is an international play. This is a company based in Argentina. It's the Amazon of Latin America. They service 18 countries. You can see here that the stock gapped up on earnings, up above the 10-day moving average. You can look at the volume here. The volume has been, we call it skyscraper volume. So this was a 3.25 million share day. Stock broke out to an all-time new high, consolidating the gains. Acted real well yesterday. That was a nice move. Now here's Xilinx. This is the semiconductor company that's involved in 5G technology as well. Again, gap up, heavy volume, 20 million shares. Staying above the 10-day moving average. However, violated the moving average slightly last week, back in an uptrend, about to make new highs. Around 130 would be an interesting breakout. Cybersecurity stock, Zscaler. Again, we got the gap up on heavy volume, uptrend, staying above the 10-day. Very powerful chart, very powerful uptrend. The entire group is strong. It seems that cybersecurity is going to be a very big issue going forward. So, if you have any questions, give me a call. Thank you very much.